right, I got a request for a back test on this particular instrument. I've never traded it, but I like to be as helpful as I can to as many people as I can, so I'm going to just give my analysis on it and maybe a couple of suggestions. Number one, the request was for a 15-minute time frame, and when it comes to stocks, I don't particularly care for the 15-minute because there just aren't enough candles in a day to determine exactly what's going to happen. I like to either scalp it. If I were to trade, I would probably either scalp it or I would trade the daily chart. And I have here the daily chart, and as you can see, if you follow my entries on the daily chart, you're going to have a lot more success, a lot more consistency with the trades, and whether or not it's a winning or a losing trade. Even the continuations are beautiful as well, as you can see here. Like they're nice. It's nice. You can continue them for a long time, and then wait for the next way back again. So 11, yeah, even this here, that is almost a successful trade. You might not trade against the trend there. Wait for confirmation, which then is here, that we are back on the uptrend. Yeah, see, and that's another successful trade. So I would trade the daily, honestly, but the request was for the 15 minutes, so we're going to go to that and see what we can do, see what we can discover here on the 15-minute chart. Some people like to do the 15-minute, I guess, because they got full-time jobs and whatever else. It's just a better time frame for them to check out. Again, I figure if you have a full-time job, I would be trading the daily chart just because of the consistency on the entries. But here we go, 15-minute chart on, I don't even know what this really is, TQQQ. I've never even, I don't play stocks, guys. So send me requests for some other, I don't know, another index or some pairs or something like that, because I don't trade stocks for this very reason. Okay, so 15-minute, we're going to go back and back test some stuff here. See, these trends are, these trends are significant. They, I don't even know how to do this, guys. Just being honest, don't even know. So we're going to come out of the session and we're going to just jump in here. There's our first entry right away. Session opens within the first 15 minutes. We've got a close, so this is half an hour. We've got a close below the line. We have strength in the bears, but we still have strength in the bulls. And so as a result, I'm not going in. Plus, volatility is a little bit low. I like to see 25% when I'm on a 15-minute chart. There we have it. We're coming back to retest the line, it seems. Possibly. That could be an entry, actually. That could be an entry. Let's go back, because it is in an upward trend. There it is. Strength is there. Volatility is there. Everything is there. So we're going to go ahead and open a trade on this one. Take into account your spread and all that good stuff. So 0.73, was it? 0.73. All right, so we're going to add 0.15 to 1.5 to that. So 73, half of 73 would be 36 and a half. 36 and a half on top of 73. That would be 109 plus your spread. Who knows what the spread is? I'm just going to add another. Tick to that. So 119, or another pip rather. And then on the plus side, that is 73 times 2 would be 156. Sorry, no, 146. Oh, but 56 because of the pip. There we go. All right, and we'll see where this takes us. We're in profit, and then we went right back the other way. And whether or not this is an entry or not, Simple say it is. So we're going to go ahead, enter another trade the other direction. And it's probable because we had this high here get denied, and you know, this was kind of that test of changing the trend, and so we're going to go ahead because that's a good entry. The fact that it's crossing again below the line is nice. We've got the strength in the bears. Everything checks out. So let's just see what the ATR here is. 83 now. So that would be 41.5, which would be 120. 124.5 plus 134. So 134 there. And then 80, what did we say it was? 83 times 2 is 166 plus the extra pip for spread. And away we go. And we are not out. Indicators show, though, that this is a reversal. Strengthen the bulls. I don't like that. We're going to close it out early. And it's a good thing because we would have stopped out. And we have closed below, but we have strength in the bulls, so that is not sufficient. There's a strong signal now at that point. This is actually the cross above, but wait, I don't believe I see strength in the bulls. We've got to see it. I did it again. We've got to see it. That candle right there. Yeah, we don't have strength in the bulls. There's a strong signal here. But I see this as, you know, starting to consolidate, right? Because we have a high here, low, high that's lower, and a low that's higher. So I'm saying no. I've lost 2 trades in a row as a result of this. So this consolidation tells me I'm not trading. I'm out for the time being until I close outside of that range, which is right there. So nope, still not. Did not close outside. All right, now we're headed downwards. We didn't close outside this consolidation range yet, so I'm not entering. Have to close out. And now we're after hours, so we have to wait until we see something. Okay, now we're closed out below, so we can look for the next opportunity. And we've jumped up. Here's the next opportunity. This is still isn't in session. There we go. Rules are rules. Here we go. You guys will know whether or not this is actually going to work for you or not, because again, I don't trade stocks. I'm just charting with the rules that I have been teaching and that have worked for me elsewhere. And you determine whether or not this is actually going to work for you. Again, I'm not feeling it. So here we go. This is 64. Be 92. 92 plus the pip spread. And 64 times 2 is 128, 138 for the spread. And now we're going downwards. We have strength in the bulls now, or sorry, bears. And oscillator starting to pinch off. This is also a new oscillator that shows this is a downward trend. Or not the oscillator, the EQ rather. So yeah, you know what, that might not even have been a good entry anyways, just because of that EQ. Again, I've seen it work, and I've got instruments where I do it, especially when it's a brand new one like this, brand new trend with the EQ. You might not have taken that trade. You might have waited for confirmation, right? Like a retest of the smooth moving average. Yeah, I don't even know whether or not to close that trade out. The volatility is there. So yeah, we would be closing this because we've got too much motion downward. Yeah, so that's where I'd be closing. And we are waiting for the next opportunity. This could be a continuation right here. Nope, because we don't have strength from the bears yet. Now we do. We've crossed below. We've got strength from the bears. Oscillator's showing good signs, so we're going to go ahead and open a trade. But it's in this case here, I always only trade half the risk, just because. So 54 plus 27 would be 81. 81 plus the pip spread is 91. 54 times 2 is 108, plus the spread is 118. And let's see where this trade takes us. And we got stopped out again. Guys, I'm not liking this too much. My trading strategy doesn't work. Doesn't work with this instrument. And here's a test above, but then we cross back below again, not showing strength in the bears. Let's go back. Oh, you guys and your stocks are so funny. I'm not making fun of you. I'm just making fun of my trading strategy in your guys' world. Okay, so this is technically an entry, right? Because, is it though? Really? Is it? I don't like it. It could be. The oscillator flipped, right? We've got strength. No strength in the bears right now. Let's give it a shot. No, I'm not. And the reason why I'm not is because I'm not even above the most previous high. We've formed a new low. I'm not above the previous high, so I'm just going to say no. You know, I might be making a mistake here. Now we're going below again, but there's no strength in the bears. We need to see strength in the bears to actually make a move here. Now we're above. So yeah, that would have been a good trade to take on the way up, but I didn't feel like it. Just being real, guys. All right, now we're coming downwards, and we do see strength where we need it. So this is an entry. 81. 81 times 1.5 would be 121 plus the spread. 81, 162 plus the spread. And we're already going up against it, guys. It's another losing trade. I'm just going to stop right now. Like, I'm not going to go on. My trading strategy does not work with this at all. Like, who in their right mind would take 5 trades in a row losing and then say, yeah, let's keep trying? No. This requires a reanalysis of my trading strategy and whether or not to even use anything from my trading strategy on this instrument. However, I am going to go to the daily chart and I'm going to show you something. We're going to go back to October 19, the year 2019. That's not a crossing above, but this one is. So this is the first candle that we have above the line, and obviously that's a win. Here's the next candle that we have crossing below. All of the strength indicators are showing, yep, we're bearish. And I mean, like this first trade, look at how many days this went on. Great. You know, you could have closed here and, you know, re-entered because we crossed above the smooth moving average again. You know, so about, let's say, for instance, you stopped this trend here because you might not get to the whole thing. But, you know, for 105 days, you get yourself $39, 62% increase in the stock during that. And if you got some good leverage on that, That's a nice trade, especially for stocks. Okay, then we have this crossing below. You know, it's ATR is 4.96, so we just make sure that we would clear. Yep, so that would be a good trade. And that would take us down here. Trailing stop would take us out. Likely, yeah. But I mean, you could stay in it because we didn't cross up of the smooth moving average, depending on what your exit strategy is. But I mean, you know, you can even re-enter, right? When you see a bearish candle reform, you could re-enter, right? And I mean, let's say you catch 50% of this. That's another 35% in the stock price. Here's a crossing above the line, 6.58. And so that would actually be okay. This stop here, isn't that interesting? That one you might have gotten out just because of early exit. But then you got your next one, right? Or the other option is that you wait because we're crossing against the clouds trend and then coming back up again, crossing below, closing below, and then crossing above again. That's kind of like your confirmation. So you could enter there, or you could wait until you actually get some strength in the bulls right at the end of that candle in here. There's no volatility, but it's different on the daily chart. You can make some allowances there. And away you go. There's 47% over how many days? 36 days. And then you got a re-entry here. Nope, I wouldn't re-enter there. I would re-enter here probably. That's not bad, but this is a cleaner entry here. Yeah. So I'm suggesting that instead of trading the 15-minute chart, because I got murdered, that I would trade like a daily instead. So if you have any questions, let me know. If you have other requests, let me know. The next one I'm going to do is actually going to be Apple. So get requests for that. And if you have requests, yeah, let me know. And comment, get your feedback, and let me know whether or not you think that I really butchered this video or not. Clearly the 15-minute chart on my strategy is not effective. So yeah, and I'm okay with that because I make enough money elsewhere. Talk to you guys later.